Ladies and gentlemen, this is Andrew Stotz, and it's Monday, July 8th at 1 p.m. It's time for an afternoon coffee and espresso, in my case, and a talk about the all-weather strategies. I want to welcome everybody to this show and encourage you, as I always do, to ask lots of questions. Nice to see you guys. Feel free to make a comment. I see your comments as they come in, your questions and your greetings, like Zhang Zhong Jiang says, waves a hand, and Supergorn says, good afternoon, it's good to see you. And here we have Ong from Udon, as in Udon Thani, I think, right? Great to hear from you all the way from Udon. And there's Tarinrat Sawadee Krap. Good to see everybody. I'm looking forward to today because I'm going to tell you about who's going to win the U.S. election. We'll have some discussion about U.S. election and, other hot topics. If there's anything that got you thinking, feel free to ask any questions. But most importantly, we'll be reviewing the performance of the all-weather strategies. So we've got about 119 people I see on the call right now. I want to welcome everybody. It's a beautiful Monday. My mother is pedaling on her exercise bicycle, which she does for an hour while she listens to podcasts. And then after that, she's going to have lunch. Monday is my fasting day, so I don't eat on Mondays. So I'm going to have a nice espresso. What about you? Do you have any fasting day or any low eating day? I love to do that because I think it helps with my health. So let's get started. I'm going to share my screen and we're going to talk about the month of June and what we've seen so far and talk about the strategy. Yeah, there's Jordan. Jordan, good to see you. Sawadee Krap. All right. So I'm going to look at that. Pontep, good to see you. Good day. Greetings to everybody. Let me switch over to my all-weather strategy. Remember to ask questions in the chat. I love questions. I want to answer them as best I can. So we're going to do a performance review of strategies in June of 2024. We're going to talk about Asia Pacific ex Japan ex China, which was the best performer in June of 2024. This is the new addition that we've had in the strategy. And then I'm going to talk to you about how Trump will not be running against Joe Biden. But I've been talking about this for a long time. It's only now becoming clear. So remember that our strategies are global, they're long-term, and they're diversified. This is the key to what we're doing. And remember why we're here, to build wealth over the long term. I see 6 pillars of investing. First, invest in stocks because stocks have returned much more than bonds and gold over the long run. And owning a piece of a company means you get a portion of what the management team creates. Reduce risk. You want to avoid overexposure to any single asset by spreading your portfolio across various companies, sectors, countries, and asset classes. And you want to contribute regularly. Reduce stress by applying dollar cost averaging, which means consistently investing a fixed amount over time. It takes advantage of volatility and likely lowers costs and enhances long-term gains. Number 4, stay invested. Think long-term. Be patient because the benefits of compounding happens over decades. Maintain discipline. I love this picture. Follow your investment plan to avoid acting based on emotions. And continue learning. Deepen your understanding of investing and stay informed about market dynamics and refine your strategies by learning from successes and failures. Now, let me come back to you for a moment and just talk about that. Why do I start with this item? I always love to start with these 6 pillars or investing principles and also mentioning that it's long-term. Personally, I'm excellent at thinking long-term, decades. And I know that compounding happens over a long, long time. So I just always want to remember people to stay focused on the long term. Before we get started into the next section, I just want to mention again, feel free to ask any questions. We have 165 people on this feed and growing, and hopefully we could get 165 questions. So Supercorn says, I see that war in Middle East is expanding. Oil price will add to more inflation. What do you think? Definitely, I fear that we're close to World War III, the closest we've ever been. It's unbelievable to think that in this modern era, we're so close. We're so close. And we have an American government that just refuses to try to talk to people and slow things down. So, yeah, I think it's possible. And we can have inflation again. If we have war, expect inflation. It happens every time as countries print money, and they have a huge amount of spending, and they're shifting their spending from private sector to government, meaning war. And war is not a productive activity. So you're going to have a reduction in supply of goods. It's just going to be awful if we have war as far as inflation is concerned. Next question you asked is, glad to see results of separate China, Japan from Asia. Now we enjoyed the contribution from India, Korea, and Taiwan. Exactly, Suti. I got some coffee here. Hold on. All right. Now, I just want to tip my coffee glass to everybody, my coffee cup. You can see I got my Coffee Works coffee cup. Are you sipping coffee? Are you sipping tea? Let's enjoy the afternoon. Supergorn also said, any change of EU in your view, new government in many countries will lead peace or war. I don't have a major change in view, and I know the question's going to come up, when are we rebalancing the portfolio? That'll be the first week of September. But I would say that definitely there's more risk of war with the more left-leaning governments. And so we've seen that in France. Also, one of the themes that I'm going to talk about U.S. elections at the end of the session today is that the opponents of Donald Trump will do anything to stop him. And that's the reason why I don't believe he's going to be the next president. Jordan, how would you see yen reaching its bottom anytime soon? Yeah, I mean, at some point, the yen's paying the price for the amount of government debt. And so there's a lot of risk that there's more to go for devaluation of the yen. So I see more. I don't have an exact figure, but I see more devaluation there. This is coming from Anna Leo Korsakun. Welcome, and thanks for your question. China has a huge policy risk that almost no one can predict. Should we still invest in China or make a shift to India? There's a lot of risk in China, but there's a lot of risk in India. India is very expensive and the like. I wouldn't argue that you shouldn't invest in China, but I would always say to keep that investment very low or moderate. Right now, we have about 5% in China in the overall portfolio. So I wouldn't go too strong in China because I do think there are policy risks. I think there's also a risk between the U.S. and China that could keep China down. In other words, the U.S. has now got, before I talked about World War 2.5, where I said it was the U.S. taking over Europe and winning against Europe. The reason why they needed to conquer Europe and get Europe to do whatever they say is so that they can control the situation and put pressure on China. And that's happening. And so there's definitely risks in China. So if you ask me about China, I'd say I wouldn't go more than 5% in China because I do think that there are many risks. But on the other hand, China's relatively cheap. But you can also say about China that it's heavily weighted in banks. About 30% of the overall market is banks. And banks are always going to trade at a low PE multiple. And so with 30% of the market at a low PE multiple, even when China does well, its multiples don't come up a lot. All right, next question. If war happens before the election, will the election continue? Wow. I'm assuming you're talking about US. You know, one of the ways that politicians get reelected in America is that they start a war or they have an attack on them and then they respond. The reason is because people will get behind a president even though they don't like him if they think someone's attacking America, as an example. And that's the reason why we have a saying, which is patriotism is the last vestige of a scoundrel, or is basically what it means is that when a politician is grasping for power, they start a war and then they get everybody to rally around the flag with patriotism, and then the result is they're in a war. And the benefit of a war is that they get reelected. And that happened with George W. Bush for sure. So the first point is, will the war happen? If a war happens, will it happen before or after the election? I think it will definitely happen before the election. And if that's the case, then, you know, it could mean that the Democrats can rise in their power. But if a war happens during that time and there's an election in America, it should continue. If it doesn't continue, then democracy in America is gone. Another question, we are going to get into the next part of this presentation, but I love the questions coming and I enjoy them. So this one is multiversal unity. Good day, Andrew. What's your perspective on U.S. recession? How serious can it be? What's its impact on Asia Pacific? For those people that have been following for a long time, at the second half of last year, I was predicting a recession by the end of 2023. Then I said, okay, worst case, probably the end of first quarter 2024. Here, we just passed the second quarter of 2024, and we haven't had that recession. So I would argue, from my perspective, is we still are going to have a recession. It's just slower. It's slower in coming than I thought. So that's the first thing I wanted to highlight. Let me sip a little espresso. And I do think that recession can be serious. When we look at the stock market, it's important to understand that if you strip out the top 10 companies or so out of the U.S. stock market, the rest of the market is pretty flat. You've got about 30% of small companies in America that are losing money. It's incredible how painful things are in the economy. So I do think that we will have a recession in the U.S. and it will be relatively serious. I do think the Fed will come in to save the day, and that's the reason why you have to be careful about not just completely getting out of the equity markets. But the question that you've asked is, what's the impact on Asia? And I would say that when the U.S. has a recession, everybody's going to have a recession. Now, the U.S. is, maybe a little bit less dependent on Chinese imports, as an example, but the U.S. doesn't have the U.S. doesn't have the manufacturing base that's particularly strong. And so it just means that orders from the U.S. in Asia will have a problem. Also, what we've seen, and we're seeing it now in the U.S. dollar, and I think we could see it during a recession, is that everybody tries to get out of risky assets. And so what's the lowest risk asset? U.S. Treasuries. And so we see a push into Treasuries, and that can sometimes push up the dollar and strengthen the dollar. And a strengthening of the dollar in a recessionary period is going to just crush the markets like Thailand. It's going to be very hard for us, for our economies. So hopefully that answers the question, but feel free to add more questions. Welcome, everybody. I see about 200 people now on the stream, and feel free to ask any questions. I'm going to get back into the presentation in just a second. I'm enjoying some coffee, and hopefully you're enjoying tea or coffee. What are you drinking? All right. Supercorn says, if U.S. becomes a battlefield, our gold and gold funds still belong to us, or will it be gone? Yeah, I mean, ideally, the most comfortable way to buy gold is to buy gold bars and put them in your safety deposit box at the bank, as an example. That is kind of the easiest or simplest way to make sure that you have control of those. If the U.S. becomes a battlefield, I think it's going to take time for that to happen, and we should have time to get out of different assets that we may be holding in the U.S. So I would say, of course, having gold or a gold fund out of Singapore may be better than having it in the U.S., but I think it's unlikely that it's going to be messed up in the U.S., but it's possible. So have some gold in your safe, have some gold in your safety deposit box at the bank, have some gold in Singapore, and have some gold in the U.S. No problem with that. All right. So now, Chris says, given that Phenomena has been recommending both the Korean and Vietnamese market, how do you view the potential risks and rewards of these markets, especially in comparison to investing in broader Asia? Well, first of all, investing in broader Asia means you're exposed to all the countries, and therefore you're going to have lower risk, because when one country's down, another one's up. So you want to be careful not to compare individual countries against broader exposure to a region. You're always going to have less volatility and broader exposure to a region. But what you may be asking is, like, what about Korea or Vietnam compared to other markets? And, Korea, I think I see some attractiveness in that, and I'll talk a little bit about Korea in this presentation. Vietnam, we don't invest in because it's not an emerging market. It's still a frontier market, and that means it's not easy to get in and out of Vietnam, particularly for bigger funds. So I don't have a strong view on Vietnam, except to say I know a lot of people in Vietnam, but also, also I know that Vietnam is a small number of large and liquid companies, which means when money goes into Vietnam, it only goes into those, and it pumps up those stocks. And then, of course, when money goes out, that's going to also come down pretty aggressively. Newsom is not a candidate. So who's next in the queue? Well, nobody's a candidate for the Democrats. It's already the Democrat primary. There is no Democrat primary. Biden is a presumptive candidate for the Democrat Party. But there's my point, and I'll talk a little bit more about this, but my point is that the Democrat Party is going to get rid of Biden and replace him with someone. Who to replace with? Well, Kamala Harris is one option for sure. And there's other, strong Democrats out there. But the one that has done the best job in the eyes of the Democrat Party, I believe, is Gavin Newsom. And so that's where there is no queue right now except for Kamala Harris. And so my prediction right now is Gavin Newsom. All right, let's continue. I'm going to go back to the presentation. Let me bring that back up on stage here, and maybe we can show that full screen. And hold on, there we go. All right, so now I'm going to go back into the presentation, and remember that we create our strategies for decades. These are pictures of me over the years to what I'm going to look like when I'm 100. Our aim is to create strategies that perform over many decades. I've laid out most of this in my book, How to Start Building Your Wealth, Investing in the Stock Market, and it's also in online course format. So our goal is to deliver steady returns. Here we can see the all-weather strategy is the red line. The blue line is all-weather alpha focus, and the green line is all-weather inflation guard. We're targeting 6% with all-weather strategy. We're targeting 8% with alpha focus, and we're targeting 4% with inflation guard. Those are the goals that we're pursuing with these strategies. Now, From when we started the all-weather inflation guard in July of 2022, the strategies are performing almost as expected. What we have, though, is moderate risk AWS has had the highest return, and the inflation guard has had the lowest return, but also the lowest volatility, that green line in particular. And we mix asset classes rather than hold pure equity to try to avoid a portion of equity market drawdowns. So when you invest in this strategy, you're going to miss, hopefully, those drawdowns, but it also means you're going to miss the booms in the market. We're trying to capture a portion of this. So if I was to just go and grab my pen here, we can see it right here. The market is taking off right there, and we're kind of flat. I'm okay with that because we are trying to balance risk and return. So let's look at all-weather strategy, which gained only 0.2% in June. So it's 65% in equity, and right now we're only 5% in the U.S. So very, very low exposure to the U.S. And the U.S. has been strong, and so that's a challenge. We've got developed markets, Europe at 25%, and Asia Pacific ex Japan, ex China at 25%, and then gold at 25%. Now, since inception, the strategy has been up about 45.2%, and that's about 19.1% above a 60-40 portfolio. Now, in June, the strategy was up 0.2%, which was 0.8% below the 60-40 portfolio. So we've underperformed in this month relative to the 60-40 portfolio. Our 25% target allocation to APAC, ex-Japan, ex-China did great. Of course, on the other side, we had 5% in China, and that did terribly. While our 25% target allocations to gold and developed Europe dragged on the performance relative to this 60-40. So that gives you a picture of all-weather strategy. So now, before I move on to, let me just see if I can, hold on. There we are. If we've got any questions, feel free to ask those questions now. I'm going to go back into questions for just a bit. I want to welcome everybody. I see there's 225 people now on the call, so feel free to ask any questions. Let's go through some questions. The multiversal unity says, I think most Americans feel unconfident under Biden's administration recently. Definitely, they've just woken up. Remember that the mainstream media tells Americans that Joe Biden is great. You know, he's so smart and he's very sharp and all of that. That's all that they've heard from the mainstream media. So it was a bit of a shock for Americans to see his performance being so weak in the debate. But I also think that this is part of the strategy of the Democrat Party to get rid of him. Basically, you put him up on stage and let him embarrass himself, and then you have to replace him. So let's look at another question. ABB says, you own physical gold at safe deposit. Well, you may keep it at home in your safe, or you may keep it at the bank in a safety deposit box. The benefit of a safety deposit box is that if somebody was to break into your home or something like that, you wouldn't lose the gold. But the point is also, just like every kind of investing, you want to diversify where you're holding your assets and the like. Next question comes from Prawet Adun Tamawit. Says A shares, as in China A shares, seems in bad shape. Do you have any plan about it in all-weather portfolio? As of right now, I'm okay with our allocation of 5%. Part of the reason why we created the Asia ex-Japan ex-China portfolio was if we want to go to 0% from 5% right now in China, we can do that with this strategy. And so Right now, I don't have any plans to make a change, but it is going to be a change in the first week of September. That's when we'll make our adjustments to the strategies. All right. We've got about 229 people on the call. I want to welcome all of you. Hopefully, you're sitting at your office or you're sitting at your home. Maybe you're sitting down to eat some delicious food. I'm sitting in my chair, enjoying a break after lunch and after a morning of work. So let's continue on. Make sure you ask any questions that you want. Salaya DC says, do you think Bitcoin will be an important asset in the long-term future, just like gold? No. No, I don't think it's going to be. I do think it's an asset, and it's an asset that you may add to your portfolio, but I wouldn't add Bitcoin more than maybe 3% to a portfolio. There's just too much volatility in it, and it's highly correlated with markets. So when markets go down, it's not like Bitcoin goes up. So if you feel like you want to invest in cryptocurrency, then I think, 3% in a Bitcoin fund or Bitcoin trust would be fine. But if you're sitting there thinking, Andrew, I don't know if I really want to deal with cryptocurrency, you don't have to. You can't. You do not need to hold crypto. You're not going to get a huge kick out of it. You may call it right sometime and get some upside, but it doesn't provide much downside protection. And, I would just be very careful. All right. Next question comes from Rapunzel. Rapunzel, let down your long hair. Can Thailand be attractive as a destination for final residence after retirement? Well, I think it already is. My mom's retired here, but that's because I'm here. I think that there's a real opportunity for Thailand with this type of retirement. I think Thais are really good at taking care of people at the end of their lives. So, there's opportunity there. But I've learned a lot about caretaking and all of that, having my mom here now for 8 years. I've seen the strengths and the weaknesses of Thai people, of Thai doctors, of Thai nurses, of Thai caregivers. So my hope is in the future, I want to have a big plot of land where I create a retirement home for people who don't have family and don't have money. And so, Rapunzel, if you're interested in that, let me know. All right, next question from GGV. What's your view on China market? Well, as I said, China is heavy in financials, particularly banks. And banks are definitely at risk. And so banks are keeping the Chinese market down. And the second thing that's keeping the Chinese market down is I think the U.S. is doing everything it can to try to crush China and defeat them through economic cooperation or economic sanctions and holding back capital and scaring particularly American and European investors from putting money in there. And that's, again, why World War 2.5 was so critical, and that is to put pressure to get Europe on the side of America 100% and then use that to put pressure on China. And that's one of the reasons why I'm very hesitant to take a strongly positive view about the Chinese market. I would be very careful about it. So that's my view right now. And I would say it's reasonable enough to have 5% right now in China, but not much more. Supergon says, what are critical factors that impact the portfolio in this few months that we should monitor? I would say a big one for me I'm monitoring is what's happening with the performance of the U.S. market. We're underweight U.S. And if U.S. is the only markets that's really rising, then we're going to be penalized relative to that. So that's something I'm watching is what's happening with the U.S. market. But also I think it's important to say, in my case, I set a long-term strategy and I follow it. I don't make a lot of changes, even though at times I feel like, I should make a change at this point. I wait until the rebalancing period. All right. So Turd Kamon says, in the long term, should we hold dollars instead of baht? I mean, having a diversification of currencies is important. remember that many funds sold in Thailand that are investing outside of Thailand, many of these funds are hedging the US dollar exposure. And so the result is that you really do have almost no US dollar exposure. So there's nothing wrong with building up some exposure. I think in the short term, if we go into a recession, there could be more demand for US dollars and US Treasury bonds because they're high quality and low risk instruments. But then over the long run, I would say the dollar is going to come down. So in the long run, I would say the dollar is not the best asset to be in. ABB says your view on AI. My view on AI is it's going to destroy the middle class of America. My idea on AI is it's going to make the population dumber. My idea on AI is it's going to turn into a propaganda machine spreading propaganda. Those are just some of my many views on AI, but I think it's good for me then to go back into this presentation. And let me do that now. I'm going to go back to the presentation so we can talk a little bit more about the strategies. So now let's talk about Alpha Focus, which outperformed the all-weather strategy by about 0.4 percentage points, which is great. And we're 68% stocks, 13% bonds, and 19% gold. Now, since inception, the strategy is now back to 100, and that's about 5.8% above a 60-40 portfolio. So you can see that we have had some strong performance out of Alpha Focus now, which is great. And it's 1% below world equity, but with a lot less volatility. We've reduced our equity allocation to 68%, which leads to a lag as world equity performs well. So in June of 2024, the strategy was up 0.6%, which was 0.4% below the 60-40. And our 17% tilt to world healthcare outperformed, but our 17% tilt to world infrastructure offset most of that gain. So our tilts to gold and global bonds were a drag. In fact, it was a pretty hard month for our strategies and our methodology. Now let's talk about all-weather inflation guard. Here we can see our equity exposure is only 25%. And since inception, the strategy was up about 7.1% and basically 6.9% above the 40-60 portfolio. And it's been less volatile, the red line is. And we can see in June, the strategy was up 0.3%, which was 0.6% below the 40-60 portfolio. And our 5% target allocations to world energy and commodities did poorly. And our 10% target allocation to chips outperformed global bond funds. So I'm going to come back to say hi to you guys and see if we have any questions. Here's a question. Can you share your views on biotech? You know, it's been a long time since I looked at biotech. When I was in university, everybody was excited about biotech and what that's going to bring to the world, but it never turned out to be as big of a hit as they said. So I can say I don't have a huge view right now on biotech. I look at healthcare, but biotech is a much smaller slice of the healthcare thing. So I don't know enough about it to be able to give a strong view on biotech. Okay. Turk Kamon says, I want a DCA and ETF NASDAQ for long term. What is your recommendation between now and leverage of 3 times? I'm okay for high risk. Well, it's important to state that I'm not your advisor, so I can't give you advice, and I wouldn't want to give you advice without fully understanding your situation. But let's just talk generally, right? You want a DCA for 30 years. That means every month you're putting in a certain amount, and So the next part you say is, what is your recommendation between now and leverage or 3 times leverage? I'm okay for high risk. If you're okay for high risk, then, I think you got a little bit more flexibility, but just be very careful. But ultimately, I think there's some opportunity there that, is not bad, but I would just be careful about the leverage on that. All right, let's look at another one. I'm on a full fear of missing out perspective on semiconductor and tech stocks in the US. My greedy index went skyrocketing, but I also fear the music is going to stop. Do you have any suggestion or view on this? Yeah, the music is going to stop at some point. And I wouldn't want to be the one that's sitting there when the music stops. Next question comes from Grid KZM. How do you think about geonomics? I don't know anything about it, so I can't say that I have a good opinion on it. What will be the strategies for the U.S. to take control of Europe? So the strategies, it's already happened, right? U.S. controls NATO. There's U.S. controls the political influence in countries in NATO, and countries don't dare go against that interest. So those are 2, big things, but, that gives you a picture. I think once the U.S. now the other one is U.S. has military bases in NATO, and the more it can grow those military bases, the more control America has. The next question is interesting. We need to invest in Thai ESG for tax deduction. Do you have a recommendation? All right, you may not like my recommendation, but are you sure you want it? Phoenix 53, are you sure you want my recommendation on this ESG fund for tax savings? You may not like my recommendation, but for everybody out there, I know a lot of people are looking at ESG funds. For me, I would avoid ESG funds because I know that they can tend to outperform and that their risk-return relationship is worse than a typical fund. So my first answer, and Phoenix, you said, yeah. All right, here it comes. Do not buy ESG. That's my first recommendation. My second recommendation is that if you have to buy ESG, yes, buy the tax deductible or tax favored ESG strategy relative to other strategies in the market. And I think if you keep going with ESG, you have to just remember that you're not going to get as high of return in ESG projects. Now, some people would say, I don't care about the return of my portfolio. I want to be a part of, saving the environment or stopping the world from being so hot and the like. So that gives you a rough idea. Also, last thing I would say is that I remember from a young age that people said to me, don't implement a strategy just because it saves you taxes. You've got to make sure that there's a strong underlying element there. I want to welcome everybody. I see we've got about 240 people on the line. So feel free to ask questions, and I'm happy to try to answer it. So here we can see which one is better than for investing between S&P 500 or NASDAQ. That's a tough question. And remember, I can't give you advice. So I can't tell you, but it's a really tough question. But I think the S&P 500 is being propped up by not only, good results for some of those big companies. I was just at one of the buildings, one of the offices out there. But I would say S&P 500 is probably the place I would be right now, not NASDAQ, because NASDAQ has already been pushed up really high. And so I would say if I had only the choice of NASDAQ and S&P, I would probably be S&P. I would still get exposure to the markets and the tech market through the S&P. It'd just be less exposure. Phoenix says, somebody says they can invest on Thai ESG bond is still a good idea. Yeah, ask them, Phoenix, ask them to prove that. Show me the research. Show me the analysis. I would like to see it. Generally, ESG funds underperform because, think about it, you have to eliminate some companies because of their ESG scores or reduce. So look at that very carefully. I think, in fact, over the next few years, there'll be class action suits in America and some other places where people are filing suit against their advisors if those advisors have told them that ESG is going to outperform. So be very careful with that. I doubt that ESG funds are going to outperform. There's more research behind that, but just to give you an idea. We've got 271 people on the call. Makes me want to go get another double espresso and keep going. I appreciate all of you, and I really want to welcome you to ask any question that you might have. Jordan says, what kind of market is suitable for DCA method? Well, any market is suitable for DCA. DCA is not about the market. It's about figuring out how I can make monthly contributions that are at a fixed rate. Let's say $1,000 every month as an example, or 30,000 ringgit, or whatever that number is. Whatever your number is, pick a fixed number and contribute over that. So all markets are good for that. Now, if the market is highly volatile, then it's really good for DCA because it means that when things go low, they go really low, and then you're able to accumulate more shares at that time. Proet says, from the election results of the UK and France, it looks like the left wing has won. How will this situation affect the European stock market? Well, it seems to be business as usual. And ultimately, I would argue that most people are happy with that. And they think that the stock market there will do fine because those countries will continue to borrow and continue their policies. So overall, it should be good. In the longer term, it could be, much more painful for the country. But for right now, it seems good. Thanks for this session, Ping. You're welcome. It's my pleasure. M. Mark, what's your opinion about the future of the Indian economy? Tons of room to grow. I mean, I don't have a big problem with the Indian economy. I think there's plenty of opportunity there. The problem is it's hard to get access to it because if you want to invest in the Indian market, we're going to buy an Indian fund, but that Indian fund is only invested in a small number of very large and liquid companies in India. I think there's plenty of opportunity outside of those, but you can't really invest in them. So that's a constraint or a problem that I see. All right. How about investing gold fund for medium to long term? I would say not long term because gold has not been such a great performing asset over the long term. But I would say that medium term is the way I look at it, or even you could even say short term, every 3 months. And I'm willing, if the markets are weak, I'm willing to let my FEMR methodology get us into, gold. Let's see. Here's another question. I read an article dated back to 2021. Why dollar cost averaging is not working for Chinese stocks? Well, part of the reason is that nobody wants to own Chinese stocks. So even the Chinese don't trust their market. And if there's no foreign inflows, then the market doesn't go up. So DCA is kind of useless in that situation. You might as well just, put in money every month and just, don't. When the market is, where DCA really brings an advantage is when the market is volatile, because when the market collapses and then you execute, you put in the same amount of money, you get more shares. And that's the biggest value of DCA. All right, let's go back to the presentation here. And I'm going to, hold on. There we go. So basically, Talist Asset Management FEMR Asia Pacific ex Japan ex China was the best performing in the strategy. And we're a research provider to Thales, and our proprietary FEMR framework is used to identify the markets that appear most attractive. And Thales fund managers and investment committee take the research under consideration when determining the market to overweight. So we're providing the information to them. In June of 2024, the fund rose 3.7%, but was 0.6% below the 10th benchmark. Of our three overweights, only Korea performed better than the benchmark. So let's look at that for a minute. Here's a chart. We can see Thailand is just keeps getting destroyed. This is over the last 1 month. So strong AI trend supported semiconductors and electronic companies, which drove markets like Korea and Taiwan. Now the markets expect the Fed to start easing in September, and basically you can see that expectation down and then flat, or flat and then down. So there's no expectation of markets rising. So let's talk about the strategy. It's a strong US dollar and geopolitical tensions are challenges for the region. I know in my coffee business, we keep having to add price for our products and services because we import them from around the world. You may face the same thing in your situation. Now, though the US-China conflict can lead to relocation of production to Asia ex-China, I think there can be a lot of production. We're seeing the BYD plant opening up on the eastern seaboard. But AIs and EVs need semiconductors and batteries, and Asia produces much of those. In addition, the region processes many essential commodities and stands to benefit from rising commodity prices. So let's look at some reasons why Korea, Indonesia, and Malaysia appear attractive. So the PMI, manufacturing PMI in all three overweighted markets still signals expansion. Though Indonesia is coming down, overall, I would say the number is pretty good. Now, semiconductor exports are picking up in Korea. And we can see Indonesia aims to become a global top 3 producer of EV batteries by 2027. Nickel and cobalt are two vital resources for batteries. And Indonesia has the largest nickel reserves and is the largest nickel producer in the world, and the second largest producer of cobalt. So Malaysia is the 6th largest semiconductor producer, and the semiconductor industry contributes to about 25% of the country's GDP. This is what's missing in Thailand. We don't have a play, an industry that's benefiting from the what's happening global with AI and the like. And so the demands for semiconductors is not flowing through Thailand. Semiconductors are the building blocks of everything from computers and mobile phones to self-driving cars and AI. Now, American firms like Intel, Infineon, I don't know that one, and Micron and Texas Instruments have capex plans in Malaysia of about $17 billion in coming years. And the Chinese semiconductor firms like Xfusion, Tongfu, Microelectronics, and Fengxi Metal Technology are also investing in Malaysia. And Google, Microsoft, Amazon, NVIDIA have said that they'll invest about $14 billion in data centers in the country, and Chinese Bridge Data plans to invest. So the main takeaway: strong semiconductor demand to drive the Korea market. Indonesia is well positioned to ride the EV momentum, and Malaysia benefits from semiconductors and data centers demand from US and China. So let's now wrap up by looking at the US election. Given the election year, American politicians and central bankers will try to avoid disaster. The disapproval of Biden So this is a chart that I pulled together a while ago to try to understand the disapproval ratings for Joe Biden. And it's just incredible looking at this is long before the debate happened. As you can see, this was July 6th of 2024. Just awful. And after Biden's recent train wreck debate, Trump has become the favorite to become president. Trump is online to become president. And you may ask, Andrew, why is it that Trump won't become president? Well, because I think that his opponents will do anything they have to, including trying to lock him up and the like. And I think eventually they'll succeed. Now, no matter your political views, I think most can agree that the U.S. is a mess. And I talked about this mess with asset managers back in March of 2023. I went through a lot of different things that the U.S. is messy about, with his first president with obvious mental decline. This was back in 2003 that I wrote this research. Let me just see if whoops, I think I may have to reshare now. So hold on, let me go back to my strategy. All right. So ultimately, what I'm saying is that I believe Gavin Newsom is going to be the next president of the United States. And let me just reshare my screen and make sure that you can see this. Hold on one second. I'm going to try and share this if I can. Yeah. Okay, hold on. I think I may have to, let me just see. I may have to share my screen again. See if that works. Okay. All right. So let me wrap up this discussion about politics, and then I'll take the questions. Keep your questions coming. I'll answer all those questions. But let me just go back to what I've said is Biden is in decline and the Democrats need to get rid of him. My prediction is Trump will not be running against Joe Biden. And I made this prediction back in December of 2023. I've actually made it before that, but as I was presenting our global strategies to asset managers, I also made a prediction about who Trump will end up running against. Given his age, at some point, the Democrat Party will have to make last-minute replacement of Joe Biden. And I expect Trump will be running against Gavin Newsom, and members of the Democrat Party will line up to vote for him. He's the current governor of California. And Democrats love him, and they love what he's bringing. So Democrats are willing to do whatever it takes to knock out Trump, and they're inadvertently consolidating support behind Trump. However, the power of big tech, media, and social media may be more than Trump can overcome. So I expect the next president will be Gavin Newsom. The bottom line is the Democrat Party will do whatever it takes to knock out Trump. Now, before we get into Q&A, remember that the Valuation Masterclass Bootcamp number 16 starts today, and number 17 starts on September 9th. We help finance professionals become valuation experts in months rather than years. And we have many previous attendees coming from FINNOMENA, like Chachada and Tosapon and Takon and Jutamas, and Bunsim, who have all either worked as an advisor with FINNOMENA or have some other attachment. Then there's also Pongsakorn, another one. And basically, it's Valuation Masterclass Bootcamp is a 6-week guided, intensive online valuation bootcamp. And here's the QR code that you can use to sign up and get an extra $100 off any price point. So go ahead and scan that. But if you can't scan, just go to valuationmasterclass.com/bootcamp. All right, it's time for questions, and then I think we're almost done for the day. Let me now come back to the presentation. There we go. All right, what are some questions that we've got? Rapunzel says, I like Americano, iced Americano, no sugar, my Professor Andrew. Okay, we'll get that served up. I like that too. I like hot and iced. Who then from Republicans? Well, that's a good question. From a Republican perspective, I think that the best opportunity probably for Republicans was what's his name in Florida. In Florida is oh shoot, I forgot his name, but the governor of Florida right now, I think, would be a possible replacement for Trump. But I just think the Republican Party won't do that right now. Any chance that it'll be Hillary? It's possible that it could be Hillary. It's possible that it could be Michelle Obama. But my prediction is that it's going to be straight up Gavin Newsom. Here's the code that you use, by the way, just its phenomena. And here's the information on Valuation Masterclass that we put into the comments also. So you have information on that. Now, S&P 500 and NASDAQ decline next year, and they will keep breaking all-time highs. Presidential election affect the market. I don't think that. I think NASDAQ is already at a pretty high level, so I wouldn't expect a huge amount of movement there. But I do think that many small and medium-sized companies have been crushed over the last few years, and hopefully they'll make a rebound, and that's the rebound that I would look at. All right, yeah, DeSantis is the one, Ron DeSantis. Vivek is great. I think Vivek is interesting, but he had a hard time breaking through, whereas DeSantis did break through. Maybe Vivek is just too young, and he needs a couple more cycles to go on. All right, well, it is 1:59, almost 2 p.m., and I've got to run, but I want to say thanks to everybody to join, and I just want to encourage you to always think long-term when you're investing in the stock market. I'll see you soon. Whoa, that was some music just popped on. Have a great day. Have a great month ahead, a great week ahead. I'll see you in about a month, and I'll update the strategy then. Meanwhile, remember, think long-term, be happy, take care of your mother, have a good cup of coffee, and I'll see you soon.